Hello and welcome to today's web seminar, Reducing Payment Risks for Livestock Markets. Today's webinar is brought to you by Cline University, an auction insurance agency. Before we begin, a little bit about the technology we'll be using today. All of your lines have been muted for the duration of the web seminar, and you can enter any inquiries that you have at any time via the question box or chat box. And Mr. Speaker, if you could, please advance to the next slide. You can also slide the GoToWebinar box closed by clicking the orange arrow or double arrow, but do not click the black X or you will exit the web seminar. Now, without further ado, I'd like to introduce our speaker, David McBrayer. David, the floor is yours.
Thank you very much, John. I am glad to be here today. We were asked by Cline to come on and talk a little bit about protecting your auction market from buyer non-payment. This is something all auctions face as a risk, and so it's important to understand it and learn how to protect your business. Since 1953, we've been providing this specialized payment insurance to auctions, and the overall basic parameters are that it protects you from return checks or return ACHs or non-payment. Currently, we insure about 370 auction locations in the U.S. and Canada. We partnered with Cline this year to provide customized policies specifically to livestock markets. Currently, we're providing coverage on more than 550 million in transactions at livestock markets, so we're really excited that we've gotten a good reception here at the beginning. So we just kind of want to go over a little bit about the risks that you face as a livestock market. As an auction, it's something that's unique in the way that it operates, and there's specific risks involved. As a owner or manager of a market, you have to look at these risks and decide and assess how these things can affect your operations. First and foremost, large industry losses certainly happen. Everyone, of course, remembers recent large losses. The frequency of losses is not extremely high in the livestock business, but typically the losses are always over $100,000, so it causes quite a problem. And really the only way to prevent this type of risk is to work on your prevention on the front end. Once the problem occurs, it's almost too late to really do anything about it. So it's important to really assess the problems beforehand, before the problem a payment risk even happens. Livestock markets are restricted by government rules. The first thing I would do to reduce risk would be to make sure you get paid before the cattle leave. But you can't do that. The government requires that you allow the buyers some time to pay. Obviously it's much more risky allowing a buyer to take hundreds of thousands of dollars worth of product before you ever receive payment. That's the way the business works, but that doesn't mean that it's not a risk. Cash flow is a big concern in any business, especially with livestock markets, since you're required to keep your custodial account balanced at all times. I mean, how does it affect your cash flow when you have late payment or non-payment? How do you deal with that? Do you borrow money? It's something that is always on the forefront. It's important that anything you can do to make that cash flow dependable is good for your business. Right now is a good time to be in the cattle business. Prices are at an all-time high, but with higher prices comes greater risk. A truckload of cattle today is worth much more than it was a few years ago. So if a truckload gets away and you don't get paid for it, you're going to be out a lot more money. And along with that, it takes a lot more money to operate when prices are high. From an underwriting perspective, banks tend to share little information now. The days are gone where they give you some details about the customer. Just getting them to tell you if they're a good customer or not is about as good as you can get in many cases. So it makes it hard to do business with someone new that shows up and wants to. It's hard to figure out whether you should allow them to buy $300,000 or not. Difficult to keep track on your regular customers and kind of see how they're doing. So it's just kind of hard to know what financial situation everybody is in. The slowing of the mail system is a big problem. That, this plays a key in the cattle business. That's the way money moves around typically, and it gets slower every year. And this causes several problems. It gives your buyers a built-in float time. They know that from when they send the check, they're always going to have 2 to 3 days. But if for some reason it's a little bit faster, then maybe they don't have the money in their account. It also means that they may, if they were to have a problem, you wouldn't even know you had a return check, and they could come back the next week and buy again and get you for several truckloads, in 2 separate weeks without you even knowing about it. So any time that takes longer for checks to move around is a much greater risk for everybody involved. Bond amounts are inadequate. This is, we've met with lots of auctions, and this is something we hear every day from everybody. The truth is that this is probably not going to change anytime soon. That's just the way it is, and it's so that you can't really rely on bonds as your only protection. Online selling is becoming more of a issue in the cattle business, and it's something that everything is being sold online nowadays, and it's positive because you get to reach new customers in other parts of the country or connect with existing customers that couldn't make it to the sale that week. But there are also inherent risks that come with online selling. You might know who you approved to buy online, but at the end of the day, you just don't know who actually logged in, purchased the cattle, whether they were authorized by the person that you authorized. So, it's important to think through what the real cost of a loss is. If you haven't had a large loss recently, do you know how you would handle everything? If one of your largest buyers suddenly couldn't pay you, how would that affect your business? What would you do to keep the business running? Who would handle the collection of the debt? Would you personally, as an owner manager, would you have someone assigned at the auction to do that? How would you keep the accounts balanced while you're waiting to get paid? If you did have to hire an attorney, how much would you have to spend? Typically, $10,000 to $20,000. How long would it take for you to recover payment from a bond or dealing with a bankruptcy? This could be 2 months. It could be 6 months. It could be a year. What would you do in the meantime with the money that you're missing there? So what can you do to protect yourself? It's all about protection on the front end, as we talked about earlier. With the help of Cline Wood, we've developed a program that is specific to livestock markets that we're calling Livestock Market Payment Insurance. And this essentially covers markets from losses due to return check, draft, ACH given by your buyer. It also covers from any buyer that just doesn't send payment at all. Our goal was to keep this as seamless as possible. We didn't want to change the way the auctions operate. This is a new thing, and we wanted to keep business moving the way that it always has. So we don't require any special procedures for the auctions or any special documents to approve the buyers. It would cover professional buyers as well as the individual farmers and ranchers, and covers all your regular weekly auction sales as well as special sales, online sales, quarterly sales, anything you've got going on at the auction. And the basic policy covers cattle, sheep, swine, and goats, but we can endorse it really to add anything to that, horses, tack, exotic animals, equipment, really anything that you're selling through the auction. Typically, the policies that we write have an annual limit of $200,000, $500,000, or $1 million. This just kind of depends on the size of your operation. These are the maximum amounts that we would pay out in any given year. If you have multiple locations, we can issue one blanket policy to cover all of them, or we can do individual policies for each location, just kind of whatever works best. We always get the get the question about what the premium cost is, and the typical for a smaller average size auction, the typical cost ranges from 7.5 cents per hundred to 10.5 cents per hundred. So it depends so much on the situation. We have auctions with less than that, but it depends on volume, loss history, how many locations you have, the policy limit. There's a lot of different things that go into the pricing. So that's always the number one question we get, and the only way to know exactly what it would cost is to get an application in with Cline, and then we can lock down exactly what the cost would be for you. So we split all losses and recoveries with our insureds 80-20. So, for example, on a $10,000 loss, you would get an $8,000 check from us when a claim was filed. We do this. The auction's kind of on the front line to make decisions on credit and who you do and do not do business with. So keeping a little skin in the game for the auction helps you make good credit decisions and allows your procedures to remain the same. At that point, we don't have to underwrite every single risk. We leave that in your hands to make the decision. Typically, there's no deductible on our policy, so that you don't have to meet any certain limit at the beginning. So how will it benefit you if you do choose to move forward with getting some sort of payment insurance? The number one goal is to protect from catastrophic losses. This is when all businesses need insurance the most, is when the loss that you didn't know was going to happen, your largest customer, and all of a sudden you're owed $500,000, and that ruins your year. So that's the point, is to provide peace of mind for that it's not going to ruin your business just because you have some sort of unseen catastrophic loss. So I created a scenario so we could kind of illustrate the difference of how it works and that sort of thing. And I could have done just a regular, you get a return check from your buyer, but I had someone in auction give me this scenario that had happened to them, and I'd never thought about this, and so I thought I would include this. Basically, you have a buyer that he's running the show. He does have employees, but he's the main buyer. He's running the operation. He's got a $100,000 bond. He buys $150,000 in cattle at your sale. He's purchased within that week 150 at 3 other places. He drives around a lot, and while driving, he is killed in a car wreck. The cattle had already been shipped. You haven't received payment because it hasn't been the necessary time frame yet. He had already sold the cattle on the phone. They have arrived, and check was sent to his company. But by the time you find out, the cattle are gone. He is deceased, and there's no check in the mail to you. So in this scenario, we have 2 auctions. We have auction number 1, doing business as they always have. At that point, the auction tries to communicate with the employees and family for a couple of weeks. Can't really get anything done. Eventually hire an attorney to pursue this. They file on the bond. It ends up costing about $10,000 in attorney's fees. So now instead of $150,000, their loss is more like $160,000. They've just added more debt to this. They are able to eventually get a share of the bond. Remember, there are 4 auctions involved, so they each get $25,000 from the bond. So at the end of the day, they are able to get a little bit, and they're looking at a final loss of $135,000. They've had to deal with weeks of trying to handle this and still have $135,000 in losses. So auction number 2 has payment insurance, and basically all that they need to do, once they're notified of the dealer's death, once they learn about that, they submit a claim. The claim is paid within 1 to 2 business days, and a check is sent to the auction for $120,000. Remember, that's that 80% coverage of the $150,000. So we, from there on out, handle our attorneys, pursue the estate. We file on the bond. The auction doesn't incur any additional attorney's fees or anything like that. So at this point, the loss to the auction is $30,000. We are able to recover the $25,000 prorated share of the bond, just like auction number 1 did, and then we split that 80-20, just like we did with the loss. So we send the auction $5,000. So at the end of the day, the loss to the auction is $25,000. So in this scenario, which auction would you rather be? And, you know, I don't think there's any arguing that, of course, you'd rather be auction number 2. The question, you know, then becomes, what's the cost of the insurance day-to-day? How do you pay for it? You know, those are some of the concerns. So this is where Cline Wood has really done an excellent job working with the livestock markets, showing them the best way to pay for this. We've developed some different premium options. You know, we do it on a per $100 basis as well as a per head basis. You know, what happens is Cline Wood kind of consults with you on how this best fits into your operation, and then we can quote either way and get this fitted in for you. So the second benefit really to the auction is dependable cash flow, knowing that you know, this is as close as you can get to knowing that you're going to be paid for sales that you make. You don't have to worry about collecting on sales that have already happened. You know, you just deal with concentrating on making your market better and new sales. We've been doing this for 60 years. We have a room full of guys doing nothing but making collection calls, something we're very comfortable doing, and the best way to handle the judgments and collection procedure. You know, it helps having just a third party involved. It allows you to keep your relationships with your buyers and let us be the bad guys that are hounding them for paying, even if it's just late. You know, we're happy to help collect even before a claim is paid. You can call on us, and we'll be happy to get involved and help you try to reduce your loss on the front end. You know, we talked about the online selling, and whether you are or you aren't doing it right now, I think it's something that everyone is going to be doing eventually. It may take a little while for everybody to get there, but it is going to be something that happens. So, you know, doesn't it, you know, offer a little more security and peace of mind for you, knowing that even though you don't know your buyers as well, you know, gives you some peace of mind that you've got some protection now in the case that there was a problem. You know, quick payment is one of the biggest benefits that we think is a issue for the livestock markets. You know, like I said, 1 to 2 business days from when we get a claim. So, you know, within a week or 2 from when you actually get a return check, we can have you your claim check. And so that helps you keep your cash flow moving around. You don't have to float the losses that you're incurring. Even if you know someone was going to pay you 3 months from now, it's better to go ahead and get your cash now, and if they pay later, that's great. But at least you will go ahead and get your money. Again, we handle all of the collection on the back end. We're paying you on the front end, so there's no more paying attorney's fees. You don't have any additional. There's no point in you throwing good money after bad and adding more to your loss on the back end, having to pay attorneys to pursue this. So that's something that we take care of for you, and you know, it's not an additional cost that you incur. We want to be a one-stop shop where you can just submit your claim and you don't have to worry about it anymore. We handle everything on the back end, the work and the payment. So there are risks out there, and the question is, are you feel like you're doing enough to protect your business? Your market protects the sellers from payment risk, but what protection do you have? Bonds are inadequate. You know, auction markets are a key point in the livestock business, so you should be provided with more protection than you currently have. Everyone is always a risk. You know, the story, it's always the best buyer that burns you the worst. So someone that you could never imagine one day ends up owing you $500,000. This is a fact. Payment problems happen in the auction business. It's not when it's not if you're going to have a problem, it's when and how bad is it going to be. As we discussed earlier, preventing problems on the front end is really the only way to reduce losses. Once the loss happens, there's not much that you can do to get your money back. So being protected before the problem even happens is how you reduce your losses. So it's important to act now before a catastrophic loss happens. This is a progressive product. I know that it's new. This is for those that really recognize and understand the risks and want to do what they can to protect themselves. If you want to learn more about it, talk about what exactly it would cost for you to do this, you can contact Cline today. They can get an application filled out for you, get a specific quote going. You can contact Jeff or Matt. This is their specific contact information. If you have questions about the policy, how some coverage system works, or something like that, you're welcome to contact me, and I'd be happy to answer any specific procedural questions or anything like that. But Jeff and Matt can definitely help you get a quote together. So with that, I'll take any questions that we have out there.
Well, thank you very much, David. And we do have many questions that have come in, so we'll pick a handful and try to answer them. If anybody has any questions that we don't get to today, please also contact Jeff or Matt or David. Their contact information is on the screen. And feel free to also contact one of them if you are interested in a copy of today's presentation or access to the video recording of this web seminar. So with that, the first question we have is, if a market sells livestock to a producer and the producer takes possession but never pays for the livestock, is there coverage?
Yeah, so this goes back to covering unpaid livestock, and all that we ask is that the auctions notify us 10 days from the sale date that they have not received payment from a particular buyer, and as long as they do that, they would have coverage and be able to file a claim on any unpaid livestock like this.
If a partial payment is received from a buyer, can this coverage respond to collect the balance of the purchase?
Okay, yeah, that's a good question. If an auction sells $100,000 worth of cattle and they only receive $50,000 in payment, they can certainly file a claim on the remaining $50,000. Again, this goes back to the same unpaid thing. As long as they tell us within 10 days that they didn't receive payment, then they certainly would be covered for that other partial payment.
The next question we have is, how does the claim process work and what happens after a claim is paid?
Okay, so in order to process a claim, what we ask for is a bill of sale on the cattle involved, a copy of any return checks, auction registration documents from the buyer so we can contact them. So once the problem is reported to us, we start the collection process, contacting the buyer. We will pay the claim within 1 to 2 business days. We'll file on any available bonds. If needed, we'll have our attorneys pursue a judgment against the buyer. The goal is to handle the whole collection process so there's no additional expense, and the auction can kind of forget about old losses and let us handle it from there on out. So the point is to get the money quickly to you, and then we use attorneys, just phone calls to the buyers, whatever we can do to recover the money on the back end.
If my market has a check returned for non-sufficient funds 14 days after a sales transaction, is there coverage, and do I have a certain time limit to submit a claim?
So yeah, there's no. It doesn't matter how many days the NSF check is outstanding after the sales transaction. That would be covered. For checks, we just ask that the auction deposit them within 10 days. Doesn't matter on when they're returned. You hear this 10-day period from me a couple of times, and Basically, we tried to create this in such a way that within 10 days, the auction should either deposit a check or call us and tell us that they did not receive a check. So in this case, it doesn't matter, it was returned NSF after the sales transaction. That would be covered. As far as a time limit to submit a claim, there is no certain time limit. We ask that you tell us 10 days from when you think you have a loss. So again, there's 10 days again, but it's, when a check is returned, 10 days, within 10 days, just tell us about it. If you don't want to file a claim, that's your prerogative. We think the benefit is quick payment for you, so I would expect most people to go ahead and file a claim. But if you choose to wait months or however long, then that you can certainly do that.
What happens if we sell livestock to an individual twice in the same week, once at a regular day sale, once again at a Saturday night special sale? There could be two separate transactions and two separate bad checks. How would that be handled?
Yeah, they would both be covered as long as you didn't already know that the first check was returned. And this is a similar situation if they bought it 2 Mondays in a row, 2 Monday sales in a row or something. As long as the first check wasn't returned, you will have coverage problems if you knowingly had a return check and continued to sell them cattle. But with this particular example, it's unlikely there would have been time for the checks to be returned. So yeah, it would both be covered. Not a problem.
The last question we'll take today is, how are premiums paid for this type of policy?
So as I talked about earlier, we can pay premium on a per $100, per 100 or a per head basis. Basically, you just work with Cline Wood and kind of figure out what fits best into your operation. If you're already a current Cline Wood customer, you can roll this into your other premium that you pay each month. So you're just kind of you're not adding an extra check, but the key is just to work with them and figure out which way. But we can do per 100 or per head.
Well, thank you very much, David. We appreciate your time today, and we appreciate Cline Wood University bringing this information today to today's audience. And audience, we thank you all very much for attending. If you'd like more information, please contact David or Cline Wood at the contact information on the screen. With that, today's web seminar is now ending. We hope you all have a great day.